Salesforce beating estimates on the top and bottom line, and the company also lifting its full-year forecast. Here for a closer look at the latest Salesforce results, we've got Nancy Pryl, Essex Investment Management co-CEO and Senior Portfolio Manager. Nancy, thanks for being here. So for you, what is sort of fueling this latest phase of growth for Salesforce?
Well, we think it's a combination of, on the top line, continued progress with expanding their suite of customer relationship management products. They've taken some price increases, which are coming through and helping out with revenue. And then we've got the very beginnings of their entry into really using AI technology and using generative AI to allow their customers to really monetize and get a lot more value out of all of the data that's embedded in their CRM system. So we think that is going to provide a pathway not only for this kind of 10, 11% top line growth, but potentially higher top line growth going forward.
And so, Nancy, I think you're answering my question here, because the central question for investors, it seems here to me, Nancy, was, was Mark Benioff going to be able to keep delivering that very strong double-digit top-line growth, but also keep delivering, Nancy, higher, let's call it 30% margins? Are you confident that he can keep that momentum going, not just, for the Q4, but in the quarters ahead?
We are. We're particularly confident on the operating margin. As I'm sure you know, Salesforce, for a company of their scale, and as I said, I think they're the third largest enterprise software company now, their margins really are not as high as many of their competitors. So there's still some low-hanging fruit, if you will, that they have integrating some of their previous acquisitions. And we think the combination of Mark Benioff recognizing that this is what the market wants, as well as having an activist presence on the board, will allow them to keep moving these margins, not only maintaining them in this 30-31% range, but actually potentially moving them up into something more in the mid-30% range, combined with the ability to keep a good, strong top-line growth rate.
How much is AI a part of that equation? Not just that it's something that they think customers want, but that it's also going to help on the margin side?
Well, we don't know yet exactly how it will play out on the margin side. We do think that having a good AI solution to allow their customers to really maximize the value of all of the data that they have entered into their CRMs is not only important to drive future growth, but in some sense is actually, in the long run, going to be necessary as a tool to be able to compete effectively in this space. We think it will be a very good productivity tool for their customers, and so their customers will see some good productivity increases from using AI. In the short run, there is going to be more development involved with driving this AI, but we don't think that will detract from the margin story. We think they'll be able to still grow margins even with that.
And Nancy, let's talk about competition as well, because certainly Salesforce has it. You think of Microsoft Dynamics 365. How do you think about that competition, Nancy, that rivalry? Or do you think, listen, the CRM market's big enough, it can have two players?
We absolutely think it's big enough to have two players. And in fact, we fully expect that there will continue to be new, smaller players that crop up that try to take one piece of the marketplace or another. Having a strong customer base, being the brand name in the CRM business, and then continuing to layer in more technologies, to use the technologies to drive those ultimate resources for their customers is what will keep them competitive. And so far, Salesforce has not shown any inability to compete effectively.
And Nancy, I am curious in a bigger picture way as well. We were just talking about what some of these numbers show in terms of enterprise willingness to spend, right? There was a lot of concern about that, I think, because of the rhetoric we're hearing about these CEOs saying they're concerned about the economy, but they do seem to be spending from what we can see, at least to some degree.
Well, that's right. We are seeing a lot of cross currents in the economy overall, and one of those certainly has to do with CEOs sounding more concerned about spending, but they need to spend to drive productivity. The way to cope with the increased wages that all of these companies need to pay is to drive employee productivity. Productivity tools like software, as well as using the cloud, are really the only way to get over that so that they continue to improve their margins. So I think we saw a pause in spending post the demise of Silicon Valley Bank in the spring. And now people have had a chance to reflect to see that the economy is still strong, consumer spending is still strong, employment is still strong. And so it's not gangbusters, certainly, but the environment has improved and we are seeing some good steady growth out of a number of players in the business.
And what about, Nancy, M&A right now? You know, Benioff's been talking about M&A. Some think they listen to him talk about M&A. They think maybe it's back on the table. Would you be positive about him pulling the trigger on making another acquisition? Are there holes in his portfolio where you think that could make sense? Or would you rather him not?
Well, I would say today we would rather not see a big acquisition until they get their margins a little higher, until we see them really harness the power of the acquisitions they've made, and to really focus on building out, again, this generative AI capability within their software. If there were some small software tuck-ins that could get them the technology they need or get them the technologists that they need, that would be different, but we hope they don't make another very large acquisition in the near term.
All right, Nancy Pryl, thank you so much for joining us today, Nancy. Appreciate it.
Thank you.